Ladies and gentlemen, welcome back to the channel. Tesla stock closed today on a strong note. And guys, I want to explain this as clearly as possible. Tesla stock is about to make a big move here. In today's episode, we're going to discuss the biggest upcoming catalyst, like the biggest near-term catalyst, my thoughts and expectations around them. You probably know this. If you don't already, let me give you this one. Today's Monday. Last I checked, tomorrow's Tuesday. Wednesday, we leave the seasonal weakness behind. Okay, that's not to say it's straight up and to the right, but it is to say algorithms have less of a distinctive selling pressure on markets. And I'm going to explain what I mean by that in today's episode. In simplest terms possible, we're about to be in the 500s soon. So we're going to get into all of that in today's episode. Hit the like button, subscribe to the channel, check out that link down below in the description of today's episode if you want to come join the trading community. With that said, let's get started. Now, there's actually a clip I want to play for you as well from CNBC today about the markets broadening out into 2026. And I think that is largely going to happen. But I think for Tesla, you've already started to see the tide turn. Okay. I think Tesla is going to be one of the leaders of this market. It's going to be the Tesla that we remember from 2020 and 2021, where Tesla was the stock that people were talking about. Tesla was that company. I believe we're already well on our way to seeing Tesla regain that prior glory. Okay, Tesla stock has rallied into the 400s. Tesla right now is a $443 stock. And any moment, we're about to make that move to $500 per share. Now, let me explain this kind of in chronological order, the catalyst that we have coming, because there's a handful of catalysts that any one of them could send the stock into a new leg higher. Now, keep in mind the RSI on Tesla is at about 70. So there's plenty of room to run here. Now, first and foremost, so September seasonal weakness. It's important to point this out because while it's not like something you can necessarily quantify, the easiest way to explain it is the algorithms are programmed to be a little bit more skittish, a little bit more hedging, a little bit more selling on the same news flow. Okay, so a news story or headline in October is not nearly as bad as it is in September. Algorithms control about 80% of the trading volume on any given day. So if you look at the S&P, you look at a day like yesterday and or Friday, you had 69 million shares trading hands. Well, in all reality, likely, oopsies, it's the wrong way to calculate it. Around 55.2 million of those shares were algorithms, roughly. Only about 14 million of the S&P shares, SPY shares, were actually humans, right? So the algorithms do some weird shit in September a lot of the time, okay? Well, now we are heading out of that September seasonal weakness. Specifically, Tesla recently has done very well despite September seasonal weakness. Tesla really took off on September 12th when the stock went up 7%. You broke above that 367 level. I had this on the chart for a while because basically that was your prior high on a recovery attempt bounce after the election rally. That was your prior high on February 29th. That was a prior high in late May. And it was a very important level from a positioning perspective. Well, once we got above 267 or 367, we almost immediately went to $400 a share. And subsequently, we've rallied into the mid 440s. Okay. Well, now we're set up in a very, very good way. Okay. Because September seasonal weakness ends on Wednesday. We don't have that drag anymore on markets. We are in a situation where we're primed for a lot of catalysts for Tesla. And the odds are that those catalysts are going to be pretty good. I can't confirm that they're going to be good, but the odds are that they're going to be good. Okay. Delivery numbers on Thursday. That's going to be a massive catalyst for Tesla. I'm projecting over 500,000 deliveries. My final estimate will come out tomorrow. Okay, so you'll have a day or two to kind of look at the numbers coming out from myself and others, come to your own conclusions. But I'm thinking Tesla is going to beat the numbers by about 50,000, roughly. In that event, you have investors excited about AI, robotaxi, Optimus. Tesla and Elon literally just said over this weekend that Tesla is working hard on scaling Optimus. That's big. Okay. And you potentially have the delivery landscape improving quite a bit. See, there's also this conception on Wall Street that Q3 is going to be very strong and then Q4 is going to be really weak. Q4 tends to be the strongest quarter for Tesla out of any given year. We have new products in China, new markets that have launched and opened up recently globally. Like India, South Korea is really ramping. Israel, places like that. The US seems to be doing well. There's reason to believe Q4 could also be strong. Plus, the pull forward of the demand in Q3 likely extends into October as well. So there's good reason to think October is going to be good. Now, we have V14 coming out, which is kind of like the robotaxi FSD version. Next week, okay, we have the shareholder meeting on November 6th. Between now and the end of the year, we're expecting 2 more rate cuts and at least 1 more next year, but it's really going to depend on the economic data. Inflation seems to be pretty tame. The economy seems to be holding up, doing okay. Labor markets seem to be holding up, and investors are bearish on this market. That is a cocktail for great things to happen at Tesla. Now, again, for a long time, investors were underweight Tesla. And I've explained this pretty simply. If you have the S&P 500 that's 5% weighted to Tesla, firms want to at least track the S&P. So if they're overweight Tesla, they're going to be like 7% of their portfolio in Tesla, right? More than the S&P. If they're underweight Tesla, like a lot of firms have been, for the last couple of years, they're going to be like 2% in Tesla, and they're going to overweight Google or overweight Nvidia. I believe you've started to see a change, and investors are going to start overweighting Tesla again. I think Tesla is heading into a new phase of the business. Okay. And I think a lot of people aren't even going to see this until like Tesla stock's $500-$600 a share. They're going to say, oh my gosh, look at this AI company, Tesla. What? I thought that was a car company. It could happen a lot faster than some people think. And the lineup of catalysts that we have is big, okay? Now, I am expecting at least 1 or 2 more cities over the next 3 months are going to get FSD launched in them. We've seen a lot of validation testing happening in areas around Dallas, in areas in Arizona, in, Vegas, right? California. There's reason to expect we could have some kind of news of robotaxi expanding relatively soon. Also, opening up to the general public should be happening soon as well. All of that is positive catalyst as well. Now, you also have Elon, that is an active force working in the favor of Tesla investors. For a long time, Elon had zero incentive to say anything or do anything positive for Tesla because it was just going to make his compensation package that much harder to achieve. For an example, if Tesla was a $2 trillion company today, Elon wouldn't get paid out Like the first tranche wouldn't be 2 trillion. It would have been like 2.5 or 3 trillion. There was zero reason for Elon to do anything positive for Tesla. There was actually incentive for Elon to dick around at Tesla, to pursue politics, and to do some of the things that we've seen Elon do over the past couple of years. Okay. That is done. That is done. And I don't even think that's fully reflective in Tesla stock. Like all of these things that I'm saying are new or upcoming catalyst, but yet Tesla stock is still below its all-time high. Tesla should be at an all-time high today. Okay. Just to kind of put that into perspective, you're still $48 lower roughly than your prior all-time high. Once we hit a new all-time high, that's where the real chase begins. I think that's where shorts start to cover, and you can actually see a bit of a short squeeze start to take place in Tesla stock as well. You do have 3% short interest of free float. Doesn't sound like a lot, but that's 84 million shares sold short. Take Friday for an example. You had 101.6 million shares sold short. So if you get a day where 10, 20, 30 million shares want to cover, that's going to drive a pretty dramatic price increase in Tesla stock. Is it going to be the short squeeze that 10x's Tesla in a week? No. Is it a short squeeze that could give Tesla 10, 20, 30, 40% upside in a couple of days? Yes, especially following deliveries when I think they're going to be much better than expected. We might actually add 1 million deliveries for Q3 and Q4 collectively. We might beat or smash full year expectations for deliveries. That's going to really end us on a strong note heading into 2026. And I believe 2026, along with rate cuts, you're going to see the consumer start to get a little bit better with the big, beautiful bill and provisions there. With rate cuts, you're going to see real estate that starts to move around, which is going to unlock a lot of equity for people. People are going to have a lot more money to spend, and they're going to spend it, okay? You're going to see that AI is alive and well, doing just fine. And you're going to see Tesla emerge as one of the biggest winners in the AI space. Nobody is really in the institutional world thought of Tesla as a winner in the grand scope of AI. How much upside do you think gets priced into Tesla once people start to view Tesla as one of the top AI companies in the world? Yeah, it's going to be dramatic. And I know I'm a little bit early. I love to be early. I love to look into the future and see what's about to come. That's how you make the money in markets. If you could see the future at least a little bit and be correct, you're going to make a fortune. Stanley Druckenmiller said something along those lines. Many investors have paraphrased those kind of words. And when you look at Tesla and you look out the next 12 months, it's quite easy to see how Tesla could double or triple as these things materialize. Dan Ives says Tesla's going to have robotaxi in 30 cities by the end of next year. What do you think happens to Tesla stock in that scenario? So it's starting to look like risk reward wise, you are set up very, very well for Tesla. But Tuesday night, so tomorrow night, if there is not a deal to keep the government funded, the government is going to shut down. Now, typically that is not a super big negative catalyst for stocks, okay? Typically that is not something that is too worrisome. But state of the economy, investors are nervous, labor markets, people are nervous. That's one part. But we won't get some of our economic data if the government shuts down. So for an example, Friday, we have the non-farm payrolls and the unemployment rate. We will not get that data released if the government is shut down. Okay? We will not get JOLTS job openings. I believe that's on Wednesday? No, we will get JOLTS job openings because that is on Tuesday, but we will not get the jobs report. What kind of uncertainty does that cause? As you know, markets hate uncertainty. They can handle bad news quite well, but not uncertainty. So that is the biggest risk at this point. Now, investors seem to be voting with their money today, and you could see the Nasdaq was up 0.5%, S&P up 0.25%, Dow was up 0.1%, Russell up 0.1%, VIX is up 4.5% today. It's a weird situation happening in markets. Fear is going up, at least a little bit. But stocks are also going up. There was actually some clips on CNBC today where I believe it was JP Morgan said the way to play this market is long stocks and long volatility. Basically be long stocks but hedge, which is probably fair. And it seems like that is a lot of what Wall Street is doing today. Now, this article says U.S. government more likely than not to shut down, says Raymond James. So as this is the biggest near-term catalyst over the next 48 hours, I want you guys to take a listen to what he says about this.
So we appreciate your time. Where do we stand on the shutdown? Do you see any movement on either side?
Melissa, it is most likely that we are shutting down. There's not a lot of movement. We are going to have this meeting later this afternoon. Meetings are good. However, we have two sides that don't want to blink. Both sides think that they are to the benefit to shut this down. Republicans think Democrats will be blamed, and Democrats think that the Trump administration and congressional Republicans will be blamed. So we're more likely than not. Republicans are saying that this clean CR is something that Democrats have supported in the past. So if we do avoid something, Melissa, it's because they're able to say, let's keep it open, maybe for a shorter time period than that was already passed the House, to get some more negotiations, because certainly there are some downsides to these employees who are on furlough, potentially kind of out of work for a longer time because of the kind of Rusvat memo out of OMB. So it's a tightrope, but we're more likely than not to shut down at this point.
Ed, you say that typically the party that, is digging in its heels and is essentially causing a shutdown tends to get blamed. But I guess the question is blamed for what in particular this time around? Obviously, if there's permanent layoffs, that's probably not going to be popular. But in general, is there something you would look at to say here's going to be the knock-on effect? Or is it just kind of the general dissatisfaction with government that can't get things done?
Yeah, Mike, you're right. So it's the general playbook has been the party that brings you into the shutdown gets blamed, and the party who brings you into the shutdown gets nothing for the shutdown. The last shutdown, there was a poll out that showed that 90% of Americans had blamed Republicans, and it was quick after that that we worked to reopen the government here in D.C. This would be the first shutdown that has been driven by Democrats in the last 5. So that is where it could be different. But Mike, I know that you always look at the markets, and at Raymond James, we ask the question, what do markets do when the government shuts down? And on average, the S&P 500 is up 3.2%. We see that in the kind of small caps as well. So we do think that this is an event that provides a lot of headline risk. But we would say if there's a market reaction here, buy the shutdown.
What timeframes are you looking at, Ed, when you come up with that? Now, I'm just curious because there are varying degrees of shutdowns. The last complete shutdown, I think, was more than a decade ago, if we're going to actually compare the actual extent and length of the shutdown to this one. And then also what I found interesting is your shutdown playbook, where you identify sectors that will outperform during a shutdown.
Yeah, so Melissa, what we did was we looked at what the market did in the week or 30 days leading up to a government shutdown, what they actually performed during the shutdown, and what was 30 days after. So we've had 5 shutdowns since 1995. The longest was 22 days. When we look at the market, it's not a ton of kind of data here, but it was up on average that 3.2%. We have seen the 10-year sell off at times, on average down 11 basis points. So we've seen some benefits to technology in the beginning parts of a shutdown, reversed and kind of having things like financials perform in the coming out of shutdown period, utilities doing well coming out of shutdowns. So a sector by sector analysis here, but also a market analysis, because I always get concerned that from DC, the news can always sound bad and it can always seem like a reason to kind of deviate from your plan. But at Raymond James, we want to say, all right, what is actually going to be the impact here? And the impact is not what I think a lot of people think it is. And so I think that's an important part of the conversation, Melissa.
So yeah, like he said, I mean, the government shutting down tends to actually be a positive catalyst for stocks. What kind of a checkmate would that be for everyone that thinks a government shutdown is a bearish catalyst this time around? What if it's not? that's always something you have to be open for as well. There is a lot of people that do expect a government shutdown will be negative, and a lot of the time you do inverse kind of the consensus on Wall Street. So let me know your thoughts on a government shutdown, how that could affect Tesla, our upcoming catalyst for Tesla stock as well, and how things are going to shake out in the next 48 to 72 hours. So thank you for watching, ladies and gentlemen. Have a great rest of your day, and I will see you in the next one.